It's about that time of day again. My name is Joseph. It's Thursday evening, March 23rd, 2017. Welcome back to your nightly newsletter. We're covering crude oil, S&P, gold, euro, and FDAX this evening. Crude is bearish, but we're sitting at the low of a range tonight, which tells the sellers to stay patient for selling opportunities up at the highs or a successful breakout pullback to the lows tomorrow. The S&P is bearish, but trading right inside a short-term trading range this evening. This means we're looking for traps above the highs while avoiding those fake-out breakouts to the lows. Gold is bearish, but we have two major support levels keeping those sellers from getting too aggressive. The plan is to wait for proof for the run down to the major measured move at 37.7 tomorrow. Relatively challenging chart on gold. Looking forward to digging into that with you guys here tonight. The euro is range bound with a bear bias tonight, which means our plan is simple for tomorrow. Sell the high, avoid the middle, and avoid the fake out breakout to new lows. The FDAX is bullish, but after a large overshoot of that channel, combined with two levels of resistance, it's giving the sellers a window of opportunity tomorrow, but we're waiting for proof before we can act. We're ready to wrap up what has been an incredible week of trading in our trade room and on this nightly newsletter. Friday's session is right around the corner, and we have a reliable trading strategy for all of our favorite markets. Before we jump in, though, don't forget, the only place to watch the full-length version of this video is on our blog at sidewaysmarkets.com. If you're watching the video right now on our YouTube channel, not to worry, there's a link in the description of that YouTube video. Dig into that description of the YouTube video, follow that link, and come join me on the blog for all 5 markets and all the analysis. While you're here, don't forget, join the mailing list. I'll send you an email every evening when our nightly newsletter goes live. Follow me on social, always posting important links and updates throughout the day. Download those charts. That's right. You can have all the charts from tonight's video on your computer for tomorrow. Follow that link below the video on the blog tonight. And please don't forget to grab your free pass. If you're not an advanced member here at School of Trade, you're going to learn more with me in 90 minutes on that free pass than you will anywhere else on the interwebs. Make sure you grab that free pass in the upper right-hand corner. If you're brand new here to the SOT communities, first time stopping by, make sure to check out the frequently asked questions page on the right-hand side. And if you got any questions for me, I'll be around here anytime you need me. Holler at me. Use that live support tool on the right-hand side of the website. It's been a fantastic 4th week of the month. Let's take a look at tomorrow's schedule and get this plan ready for a very important Friday's trading session. First of all, tonight here, Thursday evening, nothing major here coming out of Asia on Thursday evening. We go right into Friday the 24th. The first thing I think about when I see a Friday is early in, early out. The first thing I think about for a Friday is early in, early out. Get to those trades early after 11 a.m. on Fridays. Be very, very careful. Volume does tend to dry up. And as I always remind you, as we go towards the end of the week, end of the month, traders start taking bigger risks, right? They're either playing with house money or they're trying to dig themselves out of holes. So be very careful of that kind of deadly cocktail combination of low volume, right, and higher risk taking. It can really make for a real dangerous environment after 11 o'clock on Friday mornings. As you can see here tomorrow, Friday the 24th, we get a bunch of news early in the session, 4 a.m., 4:30, and 5 a.m. Tough to tell which of those are going to make the markets move and shake, but we definitely have some major news coming out tomorrow morning in London session. I think the big news tomorrow, though, will be the durable goods orders tomorrow at 8:30 a.m. Eastern time. I would imagine all eyes will be on the U.S. durable goods orders tomorrow at 8:30 a.m., a very important manufacturing number for the U.S. economy. And, of course, we have 8:30 CPI from Canada, a little bit minor report there, 945 composite flash. Not going to worry about that too much tomorrow. Most important thing tomorrow will be those durable goods at 8:30 a.m. So be aware in the London session, 4 o'clock, 4:30, 5 a.m. Then again, watch out for the big news tomorrow morning at 8:30 a.m. And again, keep an eye on the time, right? Don't forget, after 11 a.m. on Fridays, you really want to be careful. My rule always is you're more than welcome to hold on to trades you're already in, right? But just be careful getting into new positions and taking on new risk as you go into the weekend, because you may not be able to get out of those positions, right, because lack of liquidity. One other reminder, too, here, if you're in Europe this weekend, right, we get a time shift in Europe. You guys get an extra hour at the end of your day, or should I say an extra hour of sunlight at the end of your day. Always a fun time of the year to see the clocks change, so be aware of that. We do not change here in the U.S., right? Eastern time will stay the same, but of course, you guys now will catch up, right, to now on daylight savings time, so be aware of that. If you're in London, I'm sure you don't need me to tell you about this. I'm sure if you've been in Europe, right? You've been waiting for this day for a few months now. So enjoy the extra sunshine of the day. Obviously, though, right, make sure you catch up on sleep, though, because that will catch up to you usually about 36 hours after that time change occurs. You got a plan for tomorrow? Don't forget, you don't do it alone tomorrow. We'll be in our trade room tomorrow morning at 8 o'clock Eastern time, and we're going to execute the plan with all of our advanced members. Looking now here at crude oil. We'll start at crude. We'll go crude, S&P, gold, euro, and we can't forget about the old FDAX tonight. Crude is bearish and trading at the low of a trading range this evening, which tells us to look for selling opportunities up above the highs inside the battle zone or a successful breakout pullback below the lows, making sure to get clear confirmation that sellers are looking for the run down to the measured move and the previous day's low around 47 even tomorrow. Now, I wanted to zoom out on this chart a little bit to kind of give you the big picture here. We clearly have a move lower into a trading range, right? And really right now what you're looking for is, and we see a lot of this tonight, is looking for price to go up so we can sell it back down, or down and then trap high so we can continue to move lower. We're going to see a bunch of these tonight, and so I want to make sure I break this down here for you. When we have a trading range, if possible, we like to incorporate some sort of bias to it. We see a lot of this tonight where we have a strong move in one direction. Most of them are going lower here tonight. Strong move down into a trading range. There's a bear bias to this trading range. Now, we learned a very good example today on crude oil of how important it is to properly define a trading range. We do some very well-defined ranges here on tonight's newsletter. And so really what you want to be looking for is for traps and failures, right? Traps and failures up above the high of that range. And then what I call the fake out, breakout, pullback. Right, which basically you're trying to avoid, right, the fake out breakout at the low. That's what we're trying to do. We're trying to avoid, right, the fake out breakout at the low. We talk about this quite a bit on this newsletter. Most breakouts fail, so we don't want to sell the breakout at the low. We want to try to avoid that fake out breakout that happens most often when it comes to trading range breakouts. So break this down here now. Traps and failures, avoid the FOBO at the low. This will apply to a lot of different markets here tonight. First of all, what I really want to do is get this price up. Buyers try to buy the pullback, most breakouts fail, and sell that back down again. That's the overall kind of strategy up at that high. And as I always remind you guys, the bigger the better, right? The bigger the better. The bigger or the stronger the move up, right? The heavier that market becomes, and the more likely it'll collapse all that way back down, right? A strong move higher, if those buyers can hold a pullback and actually get new higher highs there, then we can call this a trend reversal, and we can start looking for this now bull channel, measured moves, right? We'll go execute the strategy in the opposite direction. So when the price goes up, right, I want to see it up. Buyers try to hold the pullback. If they fail, back down into that range, right? We're looking for traps and failures up above the high of that range, back down. Assuming we get that now, price goes up, comes back, and pulls back lower. Now, here's where things get interesting. Most sellers here will take the majority of their profit off the table, right? And that, of course, causes even less consistency or less strength as the move goes lower. What we don't want to do is sell this breakout, because most of the time this breakout will whoop and right back up into that trading range. What I like to do is I like to go, if we do get that breakdown, I like to look for what I call the fake out breakout pullback. What this does is this is going to get the moving average below the range, right? Very, very important. Get the moving average below the range. That will confirm that I have enough strength to the downside. What happens a lot of times is the moving average is right here. It'll pull back, right? Get stuck now inside, and then bam, right back up to the high of that range again. We don't want to make that mistake. So the way that I describe this is you want to see strength. You want to see strength on the breakout. So as a new trader, you're probably thinking to yourself, well, what does it mean by strength? My definition of strength, the easy way to define strength, is it's strong enough to get that moving average outside the range. Now, that's only half the battle. That just tells us now that we have enough strength. Now we need to fend off the buyers, because what most successful traders, experienced traders know is they know that that pullback is likely to still fail. Again, breakouts usually fail, so we don't want to take the first one. What I'm looking for is I'm expecting buyers here to try to buy this market back into that range. Okay? Probably a good idea because most of them fail. The problem though is it's a bear bias, and so we know we're going to see sellers trying to extend this move lower. We just don't want to get caught on the wrong side of that range and get slapped right back into that range. So what I do is, knowing that the buyers are going to try to send that price higher, just think about where those buyers would have their stops, right? Their stops will be right there. Stops will be down below there, right? If I was going to buy that, those are the two locations where I'd keep my stops. What I'll try to do now is try to get in, trap high, strong signal candle now. That's the key on this trade. Strong signal candle, you know where those stops are, right? And we're trying to sell into those stops. That's the key. To get this thing really cooking to the downside, we need to get through that low, but then catch those buyers on the wrong side and run them out. We need those stops to get run to throw gasoline on this fire, right, and run this thing lower. So that's the overall strategy when you see a trading range, right? Trap high or fake out, breakout, pullback at the low. Now that we've covered that, that will make my job easier as we go through these charts here tonight. First of all, I do want to point out here on crude oil, we got to wait and see if we get there, obviously, but there is a large measured move, as you can see, and kind of watching here right now. That larger measured move, as long as we don't make a new high up there, right, that larger measured move will be in play. The prior day low is also really important, right? There's the prior day high. They couldn't quite get through the prior day high. It's very common when we see price really struggle to get through the prior day high, it'll rotate back down to that prior day low, right? Think of it as one big trading range. Try to go higher, didn't work, it'll go back down to the low and try to find more buyers now, right, to buy down around, in this case, around that 47. So that's definitely an ultimate target here for those bears tomorrow. Want to make sure I got that on the chart there for you tonight, and that's available for download below tonight's video. Kind of zooming back in though, a little bit easier to see now. You can easily see here, right, this strong run down. This strong run down, of course, right, gives us a move back up, down, double top, double bottom, 1, 2, 1, 2, rotating back and forth. And so that, of course, gives us now that trading range. What's the plan of the trading range? You guessed it, up and back down, easy, or down but back up, right? Down but back up, right? That fake out, breakout, pullback that we talked about earlier. Relatively simple idea. The hard part is just stay away from the middle of this range and be very, very careful getting caught trying to be that first seller trying to sell below that 66. Up and back down, down and back up before we try to chase after that move, right? Whenever we push the low of a range like that, I'm always thinking traps, really expecting those buyers, well, really you're expecting sellers will not want to sell low. That's the big problem that we have. Keep an eye on the battle zone up around this 98 area. This would be a great spot to look for it. We also have kind of a rising resistance trend line. There was a previous support trend line there. That will also be a great spot there to look for, right? Resistance areas there overhead. And so again, get it up so we can sell it back down. What would it take to be a bull tomorrow? What would it take to be a bull? We have to see this market get up, hold that pullback. If they hold that pullback and keep going, then we know we're talking bull market. And of course, we know the plan for that, right? New channel, new measured moves. We'll trade rotation. And don't forget, we'll do that tomorrow with all of our clients in the trade room. Let's keep rocking. Let's keep rocking. Go to the S&P here now. The E-mini is bearish and trying to retest yesterday's low at 32.5, but we're sitting on the measured move right now, waiting for the opportunity to either sell up in the battle zone or below this range with a successful breakout pullback. Boy, the bears finished the session with a strong move lower, but right into a trading range, so we want to sell high if possible and be sure to avoid that fake out breakout as we try to make new lows goes tomorrow. Now, there are a couple different variations of this channel. I drew tonight what I think to be the most reliable channel. However, you may notice, right, you could draw that a little bit differently, and it kind of lines up a little bit shifted, right? It's a little bit shifted there. There's a few different ways you could have drawn that channel right now, guys, if you've been following along at home tonight. So just be aware of that. I'm not going to say this one is gospel.